Welcome back, investors, to Ticker Time News. I am Adam, and the stock market today, well, it opened up a bit on the weaker end of the side today. Look at this gap down here this morning. I want you to focus on the middle of the chart here for what took place today. This gap down, this weakness this morning, and it was undercut by rising Treasury yields and continuing growth concerns. The major indices drifted lower throughout the morning trade, but they rebounded. They rebounded in the afternoon from, of course, what we've been talking about all week, a short-term oversold condition. That's right. The sentiment shifted. It was fueled by price action in the S&P 500 specifically, which tested the 3,900 level as its intraday low. As a matter of fact, it got down. Let's see, what was the absolute low today? 3,903. 3 points away from 3,900 even. That was its bottom today. And that is a key level because it's very psychological. Just like, say, the 400 level in the SPY or even the 4,000 level on the S&P 500. These numbers, these even numbers, they play a trick on traders' minds. And, of course, the S&P 500 at the 3,900, 3,903 to be exact, it found its support there. And it pushed higher into positive territory by the close. The bounce was driven by a rebound in the heavily directional mega cap stocks. They keep guiding the way. The Vanguard Mega Cap Growth ETF, ticker symbol MGK, it was down as much as 1.9% this morning, but ended the day up 0.2%. Now, despite the afternoon recovery, it was still a relatively weak day for the market. At midday, decliners led advancers by a nearly 6-to-1 margin at the New York Stock Exchange and a greater than 3-to-1 margin at the NASDAQ. The margins, they came somewhat closer by the end, but still, they still showed a strong skew towards declining stocks. The S&P 500 sectors, they were led by utilities and healthcare, which are defensive. There is still a defensive posture in this market. But look at this rebound that took place, right? It really kicked off around the lunchtime hour, right? 12:55 p.m. Eastern. That's where this blue trend line starts to kick off, and it's riding that line up. And I thought once it got back to pay attention to this purple line. Let me get the highlighter out here to make things a little bit easier. The purple line that is running across the screen right here, that is the lower end of the weekly expected move, right? Which is your risk range that is calculated from implied volatility and so forth from the options market. So the options market prices in where it thinks the market will be, or different equities, products within the market, where they'll be by the close of business on Friday. Whenever, or typically I should say, whenever a stock or indice, like we're looking at the SPX here for the S&P 500, typically whenever you see this type of movement and it breaks below that weekly expected move, either on the bottom end or even on the upper end, 68% of the time by the close of business on Friday, the markets have pushed their way back to being within that weekly expected move. That's why these numbers are so important to have and have them mapped out on your chart, because they're almost like, you know, video game cheat codes, left, right, up, down, whatever. They help to guide you. And we do about 40 products every Sunday evening. We give them out to our investor community. If you're interested, click the first link in the description or even the second link in the description to our Discord channel, and you can find out more there as well. Okay, so this, at the end, we had a nice little 30-minute or so rally right here at the end of the day. Very strong, much better than yesterday. As a matter of fact, it was the complete opposite. Yesterday, those two red bars going down. Today, two green bars going up. So we may have finally seen that little bounce today. And how far can that bounce go? Well, let me go back to the daily view here for the S&P 500, the SPX. Notice this blue line. Well, let me adjust this chart just ever so slightly. I need to pull it up so it can get out of the volume so it's a little clearer to see. Okay, I want you to pay attention to, I'm going to highlight this blue line right here. This blue line. Now, this blue line perfectly captured nearly to the penny. We have the June low. Oh, my highlighter disappeared. We have our June low right here. Okay. And then we had a test in the middle of July right here, almost like a back test. And then the rally really kicked off from there. Now, after hitting the trifecta of resistance at the top, we've drifted down pretty fast, and we've tagged this line now. So if you are bullish on the market, you really want to see the market take off from here. So if you're looking for a rally, you want to see it take off from where we are right now, bouncing off of this blue line and continuing up. Now, the next area that I think is key for a potential rally is there was a gap left right here on the way down, and there's another gap right up here. Those two gaps would be key for any rally, any sustained rally in the first part here of September. Today is the first day of September. Happy trading, September. It's going to be a rough month, starting with Friday. Friday is going to be a tough month, a tough day, of trading. And we'll talk about that. We'll talk about that, getting tongue twisted. We'll talk about that in just a moment. But this first gap is right around 40.50, okay? 40.50 or 405 on the SPY. The second gap is a little bit further away, somewhere around the 4,200 or 420 on the SPY. So those are two key levels. Mark them out on your chart. Again, 420 for the SPY, and that is 4,200 for the SPX, and 40.50 for the SPX, and 405 for the SPY. Those are crucial areas for a rebound. But I don't think this rebound is going to last very long. I don't think it's going to last like our summer rally that we had. I don't think it's going to be anything like the summer rally. But we are due for a bounce, and this could be the beginning of that bounce. If we look at the SPY, let's pull that up here real quick. Nice to see it turn green today as well. But you can see it got outside. And it's kind of tough, but it got outside of that weekly expected move. It bounced, pulled itself right back in there. And, why are we getting a bounce right here anyways? Well, if we look at the RSI, look at this. It's just kind of like gone straight down. In price action, straight down. Boom, boom. That's why we're getting a bounce right now, because of the oversold condition. Right now, the SPY RSI is at a 30.6. 30 and below is oversold. So we're sitting right on that oversold line. And you can see on the SPY, there is a gap right here, and that's about the 405. And then the gap that was left up here, which is right about 420. Okay. So we've got those places to keep on our chart here. As we move on. Let me go to the Qs, and then I'll go to the IWM, and then the sectors. I want to talk about energy for a moment. So looking at the Qs, a little bit different. Still same thing today. It got underneath that weekly expected move on the lower end. It bounced, came right back up, and ended the day above the lower end of the weekly expected move. Now, it also has a gap right here, which is right about 305. For the Qs, and there's another little gap up here right about 320 for the Qs as well. So those are areas that you want to mark on your chart. They will be key for any rally sustaining. beyond just a bounce to, like, you know, the first gap, right? A bounce up to that first gap, I think that would kind of be pushing it, but who knows? No crystal ball here. Just reading the charts and the sentiment and seeing where we might be headed here. All right, IWM, which is your smaller caps, they still came up at a loss today, down 1%, while the other major indices were in the green. They left a gap this morning that could be filled. Now, if we look at the candle here, the candle is structured for today like this. You've got the wick, and then there's a little bit of candle at the top of the wick. That's what this candle right here looks like, which to me looks like a reversal candle. It looks like the letter T, which can be considered a reversal candle. So coming in, filling that gap that it left today would not surprise me for tomorrow. You know, that gap, you know, once it breaks above that, it's about 183. And then we have the gap that was left here on the way down. And that starts at about 188, 189. All right. So that's a place to mark on your chart for IWM. Okay, let's keep moving on to the sectors we shall go. Now, utilities, like I said at the beginning, utilities and healthcare, those were your top performers today as far as the 11 S&P 500 sectors go. Man, semiconductors, they got hit hard today because of NVIDIA, and we talked about that in depth yesterday. Now, the defense sector continuing to get some movement here with utilities and healthcare. Healthcare was up 1.7%, which was at the top of the leaderboard today. Those are defensive stocks, and they reflect a continued risk-off mentality, all right? That's why I don't think this rally is going to go very far. You know, I mean, we could get a little ways. I mean, we could make up the past couple of days of falling, but I don't think it's going to be a summer rally. Not at all. Friday just could completely change things. Now, energy, which was the big loser today, down 2.3%. Materials down 1.4%. And then technology down 0.5%. They were your big laggers in negative territory today. So why did energy, and let me just throw that up here real quick before we go to oil, because that's, you know, the driver for energy right now. Here's what energy looked like with the weekly expected move load. Boom. It broke below its 20-day moving average. It has fallen significantly below its 5-day EMA. It has an island topping pattern that it has left behind in its wake. How much further could this thing go? Or have we reached some sort of a bottom? No, we are not at a bottom at all for anything in the market. The market will see more pain, but short term, I'm not sure we're going to see much of a bounce here for energy. If we look at the RSI, it is not oversold like your SPX or your SPY or your Qs or IWM. No, it's not. Energy could have a little bit more room here to fall. Now, if we go look at oil, just type in US oil, no spacing on TradingView. And if you don't have TradingView, there is a link in the description of this video. Click on it, sign up, doesn't cost a penny. You can chart here with us. Now, oil broke through its resistance that it, or its trend line that it had been using for the past couple of weeks, and it has the past 3 sessions sold off pretty hard. 4.7% down, 3.8% down, 2.6% down. Right now in the after hours, it is, when I pull this up here, look on the bottom right of your screen, it's up about 1% in the after hours. So again, this level right here, just below the green bar at about 85 bucks a barrel right here, that seems to be acting as a significant area of support for oil, right? So it closed at just above $86 a barrel. It's now at $87.2 a barrel. So it is climbing here in the after hours. Is the island top a reversal signal? Yes. Yes, it is. Let me just draw that out for you, show you what that looks like right quick. Actually, I'm going to go back to the SPX real quick, and then I'll get back to oil. Well, let me finish my thought on oil, but I'll go ahead and pull up SPX to show you that island top. SPX. Okay, the reason oil took a big hit today was that it was falling on demand concerns after China locked down a city with 21.2 million residents. When you stop that large amount of people, and China did it because of COVID fears, that is going to play and wreak havoc on the oil industry. The oil industry needs consumption. And if the consumer is not consuming, that's not even a real word, then oil will go down. Now, we're not into the winter months yet, and I think that's going to get kind of rough for people out there, and it could be rough for energy prices going in the upwards direction as well. But we also have technology. The reason that was down, it was affected by, of course, the weak semiconductor stocks, stemming from the fallout from NVIDIA and what the U.S. government is doing to NVIDIA. I'll talk about that when we go to the semiconductor sector of this. But the Van Erik Semiconductor ETF, it closed down 2.1%. Ticker symbol is SMH. We do weekly expected move for that ETF. But it had been down as much as 4.8% earlier in the day. In NVIDIA, it dropped nearly 8% today. It logged the steepest loss after the news broke about what the government is doing. There's a new license requirement that prohibits NVIDIA from selling certain types of chips to Russia and China. Now, again, we covered this in great detail in yesterday's live stream. Okay, SPX here. Let me get my Sharpie back out. So what you have typically is you have a pretty big rush up to the top. There's got to be a gap up somewhere, and then you continue higher, and then it will roll over, okay? And then you have a gap down as you fall. This is what the island topping pattern looks like. And that's what we had right here. Our gap up was right here. We ran up to the trifecta of resistance, rolled back over, and then our gap down was right there. That is the island topping pattern. It is a reversal pattern. It signals, boom, we've reached the top, and we are done with that for now. So that's what it looks like, and on the S&P 500 as well. All right, let me clean this up, and we'll go to semiconductors here for you real quick. All right. Let me pull this down. The chart on the right, SMH is that ticker. Down 2.1, 2.2 almost percent. All right, let the weekly expected moves load. Big gap down this morning. That is left a hole that will need to be filled. You know, all gaps get filled at some point. So big red day for the semiconductor space. Let me go to the 5-minute chart. I want to show you today's price action here. Let me click a quick button to clean this up. All right, look at this. Let's call it all of the down for today happened this morning. Really, it happened overnight. During yesterday's live stream, after hours, we talked about NVIDIA and the new restriction that the U.S. government is placing on NVIDIA, stopping the sale of certain chips to Russia and China. Now, NVIDIA doesn't do any business with Russia right now, but it does with China. So NVIDIA said that there's about $400 million on the line right now. For this quarter, $400 million on the line right now. If Chinese customers don't go to or switch to alternative chips from NVIDIA, That's how much money NVIDIA could lose this quarter, 400 million. Just from China alone, and just from the restriction that was placed on them from the US government. So it's a big deal, a really big deal. What other companies could this be coming to next? So something to watch. But you can see that all the price action, it happened really overnight during off session hours. It was down 5.5%. NVIDIA was just in the after hours yesterday. So when you look and see where we ended up opening at this level right here, you know, we tapped that same level twice before closing at it. So, you know, this, you could almost say there's like a, hold on, a cup and handle here on the 5-minute chart. Let me just clean this up a little bit. So you've got the cup or the bowl, right, like this, and then you're making a handle right there. So, you know, you can call it like that if you want to. I can see where that pattern may stick out. All right, let me pull up NVIDIA, NVDA. They were the big cause of the weakness in semiconductors today. And look at that, almost a same pattern as the ETF, which tells you something. Now, I lowered my my buy point for NVIDIA a couple live streams ago. I wanted it sub 150, and I was thinking, you know what? You know, really sub 140 is really what I want to get NVIDIA for. And I didn't think it would happen. And then this news broke, and bam, I said it would happen today. And it most definitely did. The majority of the day, including, is it still, last time I checked, still in the after hours. Okay, well, that's closed up. It's already too late. In the after hours, it was still at 139.9 something. So it was still below where I wanted to get NVIDIA. I did pick up some NVIDIA today. Didn't go heavy because I still think there's room that it could come down. But I did open, well, not open, but I added to position of mine with NVIDIA. So I like the company long term, but it's got some headwinds coming up in the short term, especially because of what the U.S. government is doing here with NVIDIA. All right, let's keep moving on. Growth stocks today, they were a weak spot. Obviously, looking at the IWM and the Russell 2000 being down still over a percentage point, while everything else kind of turned green, small caps didn't. And there was some disappointing guidance from Okta. Ticker symbol is OKTA. OKTA. Okay, technical analysis. Okay, I see it now. Perfect. Wonderful. Let's pull that down and let's keep rolling. They were down 33.7% today. And again, this is on disappointing guidance. We've been talking about this for months, saying that companies, they're going to have to come out and they're going to have to lower their guidance. EPS, revenue, their projections need to come down, and they need to face reality. And, you know, we're just going to continue to see this snowball effect with these companies coming out with lowering guidance and so forth. But there it is, big drop today, 33.7% is how far it fell. You can see that bottom right side of your screen there. 60.60 is where the stock is trading at now at the end of the day. And then we had MongoDB. MongoDB, the ticker symbol is MDB. Oh, gotta get my cursor back over here. MDB. Let that load there. It was another one that was hit today with the horrible guidance. Look at this. This thing was down 25.3%. This is what helped to keep small caps down today. These big losers, these companies that dropped big time, that's what held the IWM down from really going anywhere today. And then we had longer dated Treasury yields. That didn't help the growth stocks as well. If you looked at the Russell 3000 Growth Index, it closed with a modest loss, while the Russell 3000 Value Index closed up 0.2%. Now, talking about those Treasury yields, they settled near session highs. Let's go to the 2-year US 02Y. Look, this thing's been on, it's like a rocket ship right now. Look at that. Oh my gosh. Man, they are just on a run right now. On a run. Look at that. The 2-year today, it pushed above 3.5%, up 8 basis points. It closed at 3.52%. Man, if it, see this area right here, let me get the highlighter back out. Right here, this high that was hit, that was 3.45. 3.45. That was the high. And today, it got to 3.55. Breaking above that high back there on June 14th, if the 2-year keeps going up, that is not going to help. Let me bring this down a little bit here. If this 2-year continues to rise, that's not going to be good news for any type of S&P 500. No, it's not. So we got to watch the 2-year closely. If that thing keeps rising, it's not good. And then looking at the 10-year US 10Y, if this thing, and it's the rate of change, right? The quicker the 10-year moves, the more it affects technology. So the 10-year, it rose 13 basis points. That's a big rate of change for the 10-year yield. And it closed today at 3.27. It's at 3.26 right now. Barely down. But this thing has been on a rocket ship just running. And when you have these big rate of changes, that does not help technology stocks. That does not help the Qs, not one bit. Now, if it's a smaller rate of change, then the correlation's just not there, right? Like if it's a flat day or barely up or barely down, that really doesn't affect your technology sector. But it's those big rates of change, like 13 basis points today, can have an effect. Okay. Now, I'll put a little caveat there. If the Qs are oversold, if the mega cap tech stocks are oversold, then the rate of change would affect them a little bit less. Versus if they are not oversold, if they're just hanging out in the middle, if they're overbought, then that big rate of change will shake them up. Now, looking ahead, or not looking ahead, looking back on today's economic data, this is what kind of got the market off to a weak start. That gap down that we saw this morning. We had the August ISM Manufacturing Index, and it was unchanged from July at 52.8%. Now, the expectation was 52% even, yet that was stronger than expected. And a number above 50 is an indication of expansion. 50 and below is an indication of contraction, right? Now, August marked the 27th consecutive month of expansion in the manufacturing sector. But it's the services sector that seems to be getting hit the hardest when compared to manufacturing. Now, although the July and August readings were barely budged, they are still the worst, or lowest, I guess I should say, not worst, but lowest reading since June of 2020. That's pretty bad. So I guess what I'm trying to say here is that it implies a moderation in manufacturing activity since it was unchanged month over month. And that just is coinciding with a welcome and sharp improvement in the pace of price increases for raw materials? Is that a coincidence? Or is that the reason for the unchanged month-over-month number? I think the raw materials are having an impact with their prices increasing. Now, the IHS Market Manufacturing PMI, it rose to 51.5 in the final reading for August. And that was 51.3 with the preliminary reading. Get that word out right. Now, July's final reading was 52.2. So 52.2, this time around 51.5. We also got the initial claims, and the initial claims for week ending August 27th decreased by 5,000 to 232,000. The expectation was 250,000. While continuing jobless claims for the week ending August 20th increased by 26,000 to 1.438 million. There was downward revisions for initial claims and continuing claims in the prior week too. The takeaway here is that the low level of initial claims illustrates a tight labor market that continues to run afoul with the Fed's effort to induce softer labor market conditions. It continues to show that something in this labor market is not right. I just cannot put my finger on it just yet, but I'll keep searching. Now, Q2 productivity decreased 4.1%. The expectation was a decrease of 4.6, so not as bad as expectations. Well, labor unit costs increased 10.2%. The expectation was 10.7%. The takeaway here is that non-farm productivity decreased 2.4% from the same quarter a year ago, which is the largest decline in this series that began in the first quarter of 1948. See? Something's not right with this labor market. Something's not adding up. This is the largest decline since the first quarter of 1948 when they started to track the movement. Meanwhile, unit labor costs saw the largest fourth quarter increase, 9.3%, since the first quarter of 1982. It just gives you a little more to think about, doesn't it? Now, let's switch over to the housing market. Total construction spending. It declined 0.4% month over month in July. The expectation was a decline of 0.1%. Total private construction was down 0.8% month over month, while total public construction actually increased 1.5%. On a year-over-year basis, total construction spending was up 8.5%. The key takeaway here is that the continued downturn in residential spending, which featured a 4% decline in new single-family construction. Single-family homes we need in America. Seeing those go down is not a good thing. Now, that is consistent with the weak home builder sentiment. So watch out for those home builder stocks. Now, this sentiment, it has deteriorated on the back of higher mortgage rates, which is creating affordability issues for prospective buyers, hurting the housing market. Okay, looking ahead to tomorrow, Friday, market participants will receive the closely watched August jobs report. Is this thing going to go haywires and say we got another 500,000 jobs added to the market? It comes out at 8:30 a.m. Eastern. Let me go back over here. I want to go to the SPY this time. 8:30 a.m. Eastern. That's when the jobs report comes out. That includes non-farm payrolls. The expectation is 300,000. The prior reading was 528,000. I told you, September is going to be a hard month. A hard month. We got our summer rally. That's now behind us. We're looking forward now. September is historically a tough month. So we've also got that in our bag. However, just because historically a month is rough does not necessarily mean we'll go down that same path. However, keep that in mind. So the expectation here is 300,000. Prior reading was 528,000. Now, non-farm private payrolls, the expectation is 280,000. The prior reading was 471,000. We also have the average hourly earnings. The expectation is 0.4%. The prior reading was 0.5%. And the unemployment rate, it's expected to be 3.5%, which is exactly where it sits right now at 3.5%. And the average work week expectation is 34.6 hours. And that's where we sit right now, 34.6 hours. Then at 10 o'clock a.m. Eastern, we get the July factory orders. The expectation is 0.2%. The prior reading for factory orders was a full 2%. That's a slowdown, folks. That's a slowdown. Okay, I've made it through everything that I wanted to talk about today. I'm going to get to your questions there. Just I want to remind everyone, our Discord server is live. It is set up, and I want it to be a place for investors and traders to thrive. We've got a combination of public and private channels, so hopefully everybody can be happy with it, and you can learn, and you can grow, and you can become better. That's my goal here for our Discord server. So it's now open. It's now up. There's a link. The second link in the description takes you directly to it. Come join our conversations over there. I'd love to see you. And if you like this perspective, you can click the link over there as well, or the first link in the description, and that'll take you to our weekly expected moves, our trade setups, numerous every week. And make sure to click that like button. That helps this small channel out. Greatly appreciate it. Oh, and of course, if you're new here, consider clicking subscribe. About 22% of our viewership comes from investors or traders who are not subscribed to the channel. So consider doing that. Thank you. Okay, we had a lot of buyers at the end of the day. Hammer candle on the SPY. We might have a reversal soon. Yes, we are due for a bounce. Absolutely. We got the SPY right here on the chart. And you can see we had the little bounce and reversal today. It came in this afternoon. It wasn't too big of a bounce. I mean, if I measure this thing from the bottom of the wick, which was about 390, to the top, which was right about the close, I mean, that was, peak to trough or trough to peak here of 1.4%. That's a pretty good move. Tomorrow's jobs report will determine whether this rally continues and we get up to, fill the first gap that's right here at right about 405. 405. That will be a key level to watch. If jobs data is perceived to be good, then the bounce will continue and we could get close to the 405 mark on the chart and start to maybe fill that gap in. If jobs data is not good or not perceived as good, we are headed lower. So keep that in mind. The market is still awfully oversold. Okay. So the jobs data, it's got to be awfully bad to take the market down further, since we're already in an oversold condition. Okay. RSI on the SPY is a 30.6. 30 and below is technically oversold. And it's been a quick drop off. We've had a couple of gap downs on the way. So 405 would be the first area for this bounce, maybe to take profits if you're going long on this thing. And I should stress, when I say long on this thing, I mean a short-term tactical long position, right? Now, when I say being tactical, you're taking your profits at very specific points. You're not just, oh, I'm going to let this one ride. It may not be good to let something ride overnight in this market. Would you look? Yeah, I can look at PayPal. Absolutely. My initial buy in price was 71, but it's refreshing, refusing, my apology, refusing to drop since the bull rally. All right. PYPL for PayPal. And let me just do this so we're all on the same page. Okay. Now, this is interesting. Remember on the S&P 500, I showed you what the topping island pattern looked like. Well, almost had one form here, but there was a couple of things in the way, right? First off was earnings sent PayPal skyrocketing. What was this day? It was a 9.2% jump right after earnings. That didn't help set up the island top pattern like a lot of other stocks had set up. And then after PayPal rolled over, it got met with some buying interest here. Now, this red line running across the screen, it starts over here where we have some resistance to it. It goes to earnings where the day before earnings came out in the after hours, I believe. PayPal stopped, right? Market participants stopped right on that line. Didn't buy a single penny more until earnings came out, and that shot it up. But now that PayPal is coming back down, this line is now acting like support. And this is very common. Old resistance lines become new support lines, and the opposite is true all the time. Old support lines become new resistance lines. Happens all the time. That's what we're seeing with PayPal right now. PayPal got extremely oversold. Extremely oversold. I'm going to take PayPal to a weekly view. Okay. Hold on. Just got to click a button here to make it look a little better. On the weekly. Okay. If you've been watching our live streams for a while, you know that a few months ago, I was talking 2019 theory, where I thought there's a good chance that a lot of stocks and maybe the main indices would go back down to their 2019 highs. Well, that's exactly what PayPal did, and then some. This area right here, where there was this resistance building for PayPal after this ginormous drop, right? And it could not break back above those 2019 highs. Just like, before the pandemic, PayPal hit a wall. It hit resistance. It reached the top. January and February of 2020. So that line is resistance, and it is resistance right now. Unfortunately, PayPal is down a little bit lower than that. Look over here at the volume shelf profile. That's the volume bars over here on the left side of the chart. We've got green and red ones and green and orange. Green and orange are the ones in play right now. Green and red are ones that have been in play in the past. Right now, let me take a couple of these lines off of the chart, and I want to point out a very important line. That is, there's this one bar, okay, that sticks out the furthest. It comes from the left side of my screen all the way out to right here. And then there's a red line that's coming out of the middle of that bar, and it runs across this space right here. Excuse me. Guess where that lines up? Exactly where this resistance was for PayPal, its top. That is where investors said, you know what? Can't do it. Can't do it. We got to sell our shares of PayPal. That's what they did at that price point, which is somewhere around the $100 level. PayPal is kind of like cursed right now at the $100 share level. It cannot break above it. It's resistance. It's a steel bar. So what's keeping it then from falling? I mean, if it's got plenty of resistance, why isn't this thing falling more? And the biggest reason for why is because of how much it had already fallen. Let's see here. Where is my, where is it here? Where'd you go? Where are you? Give me a quick second here. I need my, here we go. Here we go. What I want to do is I'm measuring the top here to the bottom right here. That is a 78% drop in a name like PayPal. PayPal is still a solid company, but its stock has dropped from peak to trough 78%. That is a big drop for a high-profile company like PayPal. Because, in my eyes, I don't see PayPal going anywhere. I think it's a pretty solid company. It had some bumps in the road. I know it's kind of, maybe it's maybe it's our generation, PayPal, and maybe, the younger generations are more into Square or, their offshoots. But PayPal is not going anywhere. But it lost 78% of its value. That's a big drop. And I think that's one of the reasons why it is failing to underperform and drop anymore. I mean, it's nearly 80%. I mean, can you imagine 80% of something disappearing? Look at your car or your truck and think, well, if 80% of that is missing, how can I really even go forward or backwards, right? Well, that's kind of like PayPal, okay? Another thing, too, is if we look at the volume shelf profile, if we get below, I'm going to call it 69 to 70, then PayPal has like zero support down there. zero support. And if I zoom in here a little bit more, remember this is a weekly chart. PayPal right here, its lowest. Actually, I'll look over here on the right-hand side to see what its lowest was. 67.58. So that 68, 69 to 70 level, that is an, it's hard for PayPal to really go that much lower. Now, I'm not saying that it can, but psychologically, when you take 80% away from a recognizable brand like PayPal, that's a lot of damage. So I don't have, honestly, anything else to say about PayPal besides once you lose so much of your value, it is really, really hard to lose any more in a name as recognizable and as successful as PayPal. Maybe it's just old fools like me who buy PayPal when they get that low because we think, man, 80% discount in 10 years from now, I could probably make all that back and then some. Thanks. I see the floor ceiling lines now. It was a huge drop and started buying at low 70s and went to load up on more. Yeah, I'm a believer in PayPal. I own PayPal. We talked about PayPal pretty daily when it started coming off of its highs, thinking, oh, where could it stop at? And yeah, so even with the look at the volume shelf profile right now with it zoomed in a little bit closer here. This space, basically where it's trading at right now, I mean, it all averages out right there. So there is a ton of swapping going on. The buy and sell is nearly even, nearly equal. The same amount is buying as selling. This thing could probably get caught in a zone and just move sideways for a while because people are playing the swings on this. This volume on the left side of the screen, it really helps us to understand what price points people are trading at. And it's trading at where it's ranging right now. And that biggest point, that biggest price point is sitting, at $95 on this level. So 95 to 100 if I zoom out some. And that volume shelf profile, it just completely drops off when it gets anywhere close to that bottom of what, 67, 68? And even the normal volume, right, on the bottom of the chart here, volume has been slowing down some, but over the past couple of days, or I mean, maybe for about a week now, volume has been increasing, right? We have a trend going up here in volume. That's also probably helping to keep the price of PayPal elevated. Okay. I'll pull it up here. Hopefully that answers your question with PayPal. So that resistance line to support line, that's where PayPal, I think, could hang out at for a while. Maybe get into a range where that support resistance line, maybe it acts like a centering bar and price just swings up and down around it. And move sideways for a while. And if you notice too, one other thing I'll point out here on PayPal is right now it's using that 20-day moving average as support, while its 50-day moving average is still inclining. So if price continues to move sideways, these two are going to end up meeting someplace, creating a wedge between the two moving averages. So keep that in mind too as price continues to trek sideways here. One other thing to point out, right now, it is under its 5-day EMA, which is typically a more short-term bullish look, but you know, it's not all that under. I mean, it's sitting right there at it, but it is under it, so that does count. All right, and it's also not as oversold as everything else. The RSI is at a 45.5. Remember, 30 and below, that would be oversold. Awesome, awesome. Well, I know I came on late tonight to do the live stream, so I don't want to keep you too long. If you got any other questions, throw them in now. Otherwise, I'll wrap it up and see you guys tomorrow after the market closes. Please make sure to click the like button, share this video with a friend, and join us on our new Discord server. Click the second link in the description. That'll take you directly there, or just type in tickertimenews.com/Discord, and that'll take you to it as well. So I hope you enjoy it. Leave us some feedback if you can about the server. There is an ideas and feedback section on the server as well. So please take advantage of that. We want to make sure that it is unique and set up so you can succeed. You can be successful in this market, whether it's going up or going down. You are welcome. Glad to be here for you guys every day. The market is open for this live stream. It is one of the things that I love doing the most. All right, so we'll wrap it up here then for tonight. I'll see you tomorrow after the market's closed for another live stream. And of course, for our investor community, I will see you throughout tomorrow morning and throughout the day on our Discord server and in our Patreon group. So thank you guys. Have a wonderful evening and have a good day in the markets tomorrow. And thank you so very much for being here. I appreciate each and every one of you. Take care.